Good afternoon and welcome to another wonderful Wednesday. I think that's the hashtag that we should have go with this. Eunice is
Wonderful
wonderful,
Wednesday.
wonderful Wednesday. I think that captures the essence of where we are from a Wednesday perspective. But let me just get quickly situated here and enjoy our little bit of music before we get started. Give me 1 second. Let some
Okay.
people join as well. Did you put this into the private group?
All right. So are we planning to start in like a minute or so? A minute or two?
Yes.
All right. So those who are joining in, give us another minute or two as we let other people come on in.
So I'm going to take a note of wonderful hashtag wonderful Wednesday before I forget. All right. So welcome again, and let me turn down the music. Last week, Eunice, we missed you. As always, we
Yeah.
missed you.
I
But
miss being on here as well.
we had a wonderful conversation with John Dahlberg from Growth Sigma. And I had the pleasure of meeting up with him on that Thursday after the session. And he was so excited that we were able to do this with him. And
Mm-hmm.
he basically said that he cannot wait to come back because not only is John a very smart guy when it comes to helping others to build out their business strategy, but every so often I like to talk about all things financing. And he told me about this interesting thing that had me confused around some of the things that he's doing related to investing in the stock market. So I told him, the audience that we are talking to here, they are small business owners, right? And one of the things that we don't want to discount is the fact that there are a tremendous number of different ways that one can actually travel on their journey towards building out generational wealth, right?
Mm-hmm.
There's no one way to build generational wealth, right?
Yep.
Generational wealth is a matter of knowing what your financial independence, your financial freedom number is, and then putting together a plan of action in order to be able to get there. Right? When we start these conversations early on with our partners and we ask them, well, what is your financial independence number? Many of them don't really have that number top of mind.
As
And
yet. Yeah.
as yet,
Yep.
and it's amazing when we do have that conversation, and through that conversation they now know what the destination is.
Yeah.
And there's many different ways to attack that, but just to catch up the community, yesterday was session 1 of 12 with the Cash Flow Breakfast Club, and I want to give a shout out to Omni Casey with the Cash Flow Breakfast Club. I came home with a tremendous amount of flat swag, and one of these days I'll put that on over here. But not only that, I'm a people person, and just being in a position where I was able to be in a room with 20 or 30 people really was like a shot of B12 for me. And it got my energy up, and I don't know how this happened, but yesterday I actually forgot to eat. I think I had plenty of water because all I was drinking was water yesterday. And it's amazing that I got to the end of the day and I asked myself, did I eat yesterday?
Mm.
Very interesting to me overall. Just the
Yeah.
same, but rather than just continuing to catch up, let's do our business insights section before we move into our topic of the week. And it came out today. Inflation is still a problem, right? We thought that inflation had been handled, things were going where they needed to be. And over the last 3 months, it came in at 3.3% inflation on a year over year basis, right? I read the article, and the article actually said that there should probably be some hope because although the last 3 months was at 3.3, this time it came in at 3.2. I'm not excited about that. The cost of eggs is still expensive. I don't know what's going on with that. I know you do the purchasing for the household. Is there still a shortage of eggs?
The one thing that I ask myself anyway is that even if inflation goes down, are we going to see prices go down?
The funny thing about inflation is the price always goes up. It does.
The-
It's called deflation for a reason when prices go down.
All I know is I walk into the stores and do groceries every week, and it seems like my $100 still all the time. It feels like I'm getting less and less and less. So while people or others or most scholars may talk about inflation and what they're doing and all that type of stuff, for a regular mom like me, I walk in all the time and I'm like, eggs are so expensive and I need eggs. Milk is expensive. I need milk. And bread is expensive. I need bread. And I'm just saying, okay, eh, yeah, we can tackle inflation, but I don't know if we'll be able to reduce prices. Or I just have to get used to that. Okay, now I'm no longer able to get my bread, eggs, and milk for a certain amount of money. I should now get used to spending, or I should get used to the price that I'm paying now. I should get used to it. I shouldn't really be hopeful that it's going to go down.
Yeah. I think if you get used to the fact that it's not going to go down, right?
Mhm.
It's just a matter of, taking the pain, and maybe we have to figure out ways that we could get creative. I don't know, couponing, because we're already doing a significant portion of our shopping at our favorite place in the world, Costco. Right? We're a family who love Costco for so many different reasons and so many different things that it offers. But maybe we just have to get creative around other things that we could do to lessen our bill. But yeah, I agree with you. For
Mhm.
the everyday person, it's really still a pocketbook issue around what's going on in the economy. and how they feel about it. And when you have that conversation of, hey, I just spent $100 at the store, but my shopping cart is actually containing less items, that's a conversation that actually needs to be addressed just the same, right?
Mm-hmm.
So we've tackled the problem about the economy and interest rates as a whole. The second thing that I wanted to tackle is being real estate investors and having a conversation around, well, what's going on in California? Does it impact the way that we are investing here in Virginia and elsewhere? At the same time, we're doing things in Baltimore, Maryland. Shout out to Baltimore and our partner Sam Henry over there, right? But will the will there be cascading impacts of what's going on with the Florida fires, as well as the impacts to the hurricanes that happened in North Carolina, Florida, etc.? I don't remember the names of those two hurricanes. I know one was Helene, and I think the other one was Milton. Give me grace if I am not using the correct name for the hurricane, but as an investor, and as an investor who's having conversations with other investors, this was something that was top of mind. And I wanted to have that conversation with our investors here, our business owners here, because from a business owner perspective, insurance is something that is critical to their business to reduce their risk exposure. So, Eunice, give me your take on that.
It's interesting because I believe, like most topics, it'll really boil down to your location where you invest. And of course, it'll also, which is location, right? And it'll also really boil down to the services that you use in your selected investment, right? And what I mean by that is I'm based in the DMV now, DC, Maryland, Virginia area. And for me, as I buy properties around this area, would I say it's impacting real estate around here? I wouldn't say as much, only because for it to impact the real estate here, it would mean maybe in a positive way where I would say, okay, we are seeing more people moving from those high impacted areas moving to the DMV area, and as such there is a need for for more housing. So there'll always be many variables that you may want to look at. For those who are investing in those specific areas, right? For example, if you are an investor based out of California, what does that mean for you? You can imagine, pricing that's going to increase in those areas. However, you could also say, well, that's also going to boom with all the work that needs to be done. There's going to be work that has to be done that also has an impact, right? So there is never a one answer that's going to fulfill everything. You look at things like insurance. I had a very interesting conversation with a colleague the other day, and we were talking about the impact of insurance, insuring our
Mhm.
properties and things of that sort. And what they were saying is that, of course, when you have some of these companies leaving certain areas, that now means that you have more options. Now with me here being in the DMV area, there's more options of insurers because they're leaving other locations and coming to different locations, right?
Mhm.
That could also be something to look at. Have we started seeing any difference or any impact as yet. I wouldn't, so not necessarily from the specific impacts that we've experienced in the last couple of months or in the last couple of days. We haven't yet seen anything. But on in the long term, I believe there are going to be impacts. We just don't know to what extent. And yeah.
I take a different opinion of it.
Mm-hmm.
And
What?
the reason why I take a different opinion of it is because insurance is basically a pool, right? So, like if you use health insurance as an example, right? Health insurance works because there are many non sick people who are
Mm-hmm.
covering the cost of the people who are actually sick, right? So, when it comes to property insurance, right? The impacts that have been had in Florida and North Carolina in the southeastern region of the United States, those areas are the ones that are impacted, right? Those are the areas where there was a sick patient, and the insurance company will basically have to basically cover those costs. And we're hearing that in California with what's going on is probably going to be the highest calamity in that state. So the insurance companies are actually going to have to um increase prices in other areas. The thing about it is that when it comes to insurance, each state has a regulatory body that's responsible for insurance and pricing, and they would have to allow for those prices to be increased. But we well know that if an insurance company is not able to basically do business in a particular state, they will exit that state and move on, right? But
Mm-hmm.
let's transition in, and we have someone joining us from YouTube who has a question of, and thank you, Wellington, for the question. What is infinite banking? Right. So, do you want to give Mr. Botchworth a response to what that is?
Infinite banking, in very simple terms, is the ability for one to it's more of the ability of one to do their own banking. So you are not particularly a bank, but you have the ability to do your own banking and allow yourself, your family to grow in the banking area.
Hmm. And one thing that I would tell Wellington is that don't see your bank as a physical entity that holds your money, right? Use it as a concept, right, for how you are actually using it to build generational wealth. And I would also recommend that he, I'm going to assume Mr. Wellington is a gentleman, is that they read the case for IBC, but also they want to read the book by Nelson Nash, Becoming Your Own Banker,
Mhm.
right? And that would be the vehicle that you would use to have a better understanding, right? And when it comes to the term infinite banking, that is a trademark name by the Nelson Nash Institute. And if you're going to use that concept uses whole life insurance as the underlying vehicle for your banking apparatus that you set up for yourself. So thank you, Wellington, for the question. He actually has a second one inside of the chat, probably related to what we were talking about at the top, right? And Wellington says that I'm investing in construction in those areas, and it will be a big thing, especially for government contracting, right? And, there is a primary effect that is there, right? There's always going to be a primary impact. So if you watch the news, one of the things that you are hearing from legislators in that area is that price gouging is going to be a problem, and the authorities are saying that we will take action against anyone who we're seeing price gouging against. But I think one reporter had actually shown that an apartment or a home that was renting, and this is where things are different in California, is a house that was renting for $24,000 per month is now renting for $34,000 a month. And I'm if I was to put myself in the shoes of the person who did that, they probably did it really quickly, thinking, "Oh, so many people are calling me for my rental. There's high demand. I can get more for this. Let me change it up to 34,000." In that particular instance, they didn't ask themselves, "Am I violating the law?" And that
Yeah.
Zillow tracks every single price change,
Change. Yeah.
right? So now that person, hopefully, I don't know who they are, but hopefully they don't have the hammer being thrown down on them just the same. But
Yeah. Yeah.
Eunice, there was something that, when we were talking in the prelude to jumping on today, you wanted to basically have a conversation with our audience about the difference between term life insurance and whole life insurance. And just like everything when it comes to life and being in the world, there is no one path for all
Mhm.
model, right? There are going to be pros, there are going to be cons for both uh, term life insurance, and there are going to be cons for whole life insurance, right? Everyone's situation is different, right? But there's two things that I want you to tap into. One is, we know and we talk about the benefits of leveraging whole life insurance policies for implementation of your private bank. But there is a concept that's out there that get term and invest the rest. And walk us through that scenario of how do you address those when you're talking to clients.
Excuse me. Yes. Um, a lot of the times when you first have conversations with clients, it is very important to understand or assess what the client's needs are, because everybody's needs are gonna be different, and your needs today are not your needs tomorrow, or and are not the same needs that you had 5 years back. So we have to look at where you are now, what you're looking to do, then we can talk about what product works for you. Now, talking about the concept of buy term and invest the rest, that is a concept, it's not a product, right? So I don't like having to make that comparison of, okay, how about this concept and that this product. So the concept of invest with term and invest, and then the product of whole life insurance. It's not fair to do a comparison of those two. So, what I like to do instead is I like to say to clients, let me understand what your let me understand what your needs are, and based off of your needs, let us then walk through what options are there for you and what's going to meet the need that you just spoke with me about. When you come to me today and say, listen, I just bought a house. I just bought a house, and my concern is that when I pass, I would like for my family to at least be in a position where they're able to keep the home, manage, or be able to pay off the mortgage and still have the home, right? That's the need that you have. Now, there will be several options that we can discuss. Of course, there will be other things that we will have to factor in. For example, things like your financial position at that point, and many other things that you want to look at. In that instance, I could say to you, you could have a term life insurance knowing it's going to cover the duration of your mortgage, right? We could have a term for whether it's 20 years, that you know in 20 years, when you have finished making your mortgage payments, when that term falls off, then you know you no longer really have the need for that insurance, because now you've paid off your home and you're no longer worried about if you were to die before you finish paying off, what would happen to your family, right? However, if you said to me, you know, I have a home, I have kids as well. My concern is when I pass on, I would love my family to have money that they can use, whether it's today, whether it's in the future. I would love my family to still be in a position where they have something from me, whether I pass now in my 40s or whether I pass later on in my 80s. I would still love to leave some type of legacy for them. Then we can get into a conversation of, okay, we are now looking at more of a permanent coverage that you're looking for versus a term or a temporary um, coverage. Then we can have a conversation surrounding finances to understand what can you manage, what can you afford. Then we can structure your policy based off of that, right? So it's not just an umbrella where you say yes, term and invest is the best, or whole life is the best. What is what is best meeting a need at that specific time. And I'll say this, I always tell people whenever we are talking about investments, because we say, okay, you can invest the rest and things of that sort. Anytime you're talking about investments, I always say investments will always win when you are comparing products with the same dollar amount to invest with the goal of building a net worth, right? So I like to make sure that my clients understand that as well. So when you come to me and say, well, between whole life and term, which one should I go for? I know that whole life is more expensive versus term. Which one should I go for? I'll be doing you a disservice by just saying to you, okay, let's just go with the cheaper one, because is it meeting a need that you have? So once we understand the need and once we say this is what the need is for, then we'll structure it that way. Sometimes the second major thing that I see out there, especially on social media as well, when people talk about that you can invest some of the difference between the premium of whole life and term, you can invest that difference. One of the things that I don't hear people talk about is that with investment always comes the investment knowledge, discipline, and consistency. Those should go hand in hand, because a lot of times, not all of us may be consistent in our investing. Not all of us be may know all the options that are available out there that are going to give them those returns. So, what what is your motive for actually wanting to actually even do investments? How does that look for you as an individual? Are you looking to build a legacy? Are you looking to save up for retirement? What exactly does it look like? Because that's going to drive the type of investments that you're also going to be making, right? It's your investment is not driven by the amount of money that you can save from one product to another. Your investment is driven by what is your understanding of what you are doing. Are you looking to build a legacy? Are you looking to increase your net worth? Are you looking to just have an extra source of income? What are you looking to do? Right. I don't know if that answers your question. I think you're on mute, Lee. I can't hear you.
Sorry, technology. But one of
Yeah.
the things that I would say is what you just said, although you said a lot, right, is that there is a certain level of complexity when designing a policy that will fit the need of the individual, right? But one of the things that we do know as a fact is that, insurance is based off of actuarial tables, and the older
Mm,
you are, the more experience the premiums are going to be, whether you are getting term or whole life insurance. So if there was any one takeaway that anyone would be able to have with today's conversation, that one takeaway would be that insurance makes sense to get the younger you are, and every single day that you're here, you're one step to being older, right? So it makes sense to have that conversation sooner rather than later, regardless of what it is that you're trying to protect, whether regardless of
mhm.
whether it's going to be a whole life conversation or if it's going to be a term life conversation. At the end of the day, the policy has to be structured correctly to meet whatever that overlying objective is for the client.
Yeah,
Did I
I
capture
agree.
that?
I agree. And I think one of the other things, one last thing that I want to add on this one is that when you do your analysis of where you are as a client, when we sit down with you and we get an understanding of where you are as a client, you may even end up buying both term and whole life, right? Because they're going to meet different needs. Or you
Mhm.
may say, hey, I want to do several things, and this is what I'm thinking of. You may end up buying both. So I don't want people to dwell more on which one is better than the other. It's not
Mhm.
about that. It's about what's the need, what can we get to help mitigate or reduce the risks over here or over there.
No, I think even though we weren't expect to go over today, I believe that the information that was shared is going to be valued to our audience of small business owners, right? We as small business owners have, basically looked for opportunities within our own personal life, and these are the things that we have landed on. And many of the things that we share, although our business is always centered around all things real estate, these are the tentacles that fall off of that, especially as you are creating a going concern. I'm going to call a business a going concern. And when we have that conversation, is the how we got to this place was that a small business owner is primarily going to be wearing several different hats inside of that entity, right? Not
Yeah.
only are they CEO or president or whatever you want to call yourself as the leader of that organization, right? But they're also probably going to be dipping their hands into marketing as well as, keeping the books, whether or not if you're using Nav or you're using QuickBooks. But that person is going to be wearing many different hats. The risk to the business, if it's going to be a going concern, is that if that person is removed, and not talking about, has died, but if that person is removed from the organization and incapable of making those contributions, does the business immediately die. That would be
Mhm.
detrimental to everyone who is dependent upon that person and that business for their livelihood. So that's where we say the insurance component is there and can be used to take that risk off of the business owner as well as the business, right? However, the little secret that we have is that that business owner can tap into that policy using a loan, right? In times when they have a need for working capital, right? So let's just say, there are ebbs and flows in running a business, right? Accounts payables are coming in here and coming in there. They're not coming in at a stated frequency every day. That's the thing that separates an entrepreneur from a person who is in career. The business owner has a choice whether or not if they're going to tap into their lines of credit or they are going to tap into their policy. And as Wellington asked, the great question of is there interest that you pay on the policy? Something that I really didn't think about and wasn't communicating as often is there is going to be a variable or variance between what the line of credit is going to be and what the policy loan is going to be. And
Mhm.
it's always great to have options as a business owner to make a decision of do I exercise the line of credit or do I tap into the policy? The difference between the two is that if you tap into the line of credit, that line of credit is going to have a payment schedule that you have to adhere to, otherwise you go into default. What When you have a policy loan, you don't have to make the payments on a set schedule before going into default. And there is a whole lot that is surrounding that, but there are definitely going to be differences, and more so we need to have additional comments there. So I want to thank Wellington for bringing that comment to the audience and sharing, because it sparked a thought in my mind. So Eunice, we are over just a little bit. As we close down, what do you have to say to our audience before, other than we'll see you next week on Wonderful Wednesday?
See you guys all next week. Closing off, whenever you learn something new, do more research, talk to people who are in the field before you run off with it. And I say this because I know that at some point, I remember in my younger years when I just got out of college and I was excited, I landed my first job. I was always told, you only need term insurance, you don't need anything else. And I ran with it. I'm glad that we did have term insurance, but as I grew older and not older, as I got more mature,
Mature. Sure.
as I got more mature, I sought out more information on other products that are available out there. And now I have several whole life policies, of course, in my household as well. And that was a result of not just taking what I was being told or what I learned there and there and not doing more work on my own as well to educate myself. It's very important that when even what I'm saying now, go and find out if what I'm saying actually even makes sense and is correct. Be in that space where you learn and you grow and you question some of these things. It's important to make sure that we make decisions out of correct and relevant information versus just from the hype. So yes, you can have both whole and term. You can also have one whole. You can have one term and then invest a difference. There is a world of possibilities out there. It just depends on what are you looking for, what are your needs, and then you go and execute.
No, and in construction, right? Because
Hmm.
when I was in the army, I was 51 Bravo, which was a carpentry and masonry specialist. The thing that they used to say to us is, right, measure twice, cut once,
Mm.
right? So to anyone in our audience who, if you're an entrepreneur, you're starting up your business, there are many different ways that you can start up a business. You could do an LLC, you can do a corporation, you can incorporate, you can be a sole proprietor. There's so many different things that you could do,
Hmm.
right? But what I would advise to our audience is measure twice, cut once, right? So whenever you are exposed to a new idea, go and do your research, gather more information, right? Knowledge can't hurt you, it can only help you. And then when you have the right information and you feel comfortable, don't have paralysis analysis. Dip your
Yeah.
toe in the water and see what the temperature is.
Hmm.
So, with that being said, we want to thank you again for sharing a part of your day. If you have any questions that you have for either myself or Eunice, you can always contact us on Facebook or our LinkedIn profiles. We're there to help you and have a conversation with you just the same. In addition to that, we have a private Facebook group as well that is associated with all of our pages. We're here to help. We're more than happy to help. So, with that, enjoy the rest of your day and give us a call if you need advice in any of these areas that we're speaking about. Talk to you soon. Have a good rest of your day. Bye for now.